Time now to see what's on the radar, and we are back with Andrew Pyle, Senior Investment Advisor at CIBC Wood Gundy, going to tell us why Canadian transportation and logistics companies on the radar. We'll start off with TFI Logistics Company. Mm-hmm. They're all struggling. The whole industry is struggling a little bit, isn't it?
This entire segment is down on the year. So we talked about value before in the last segment, Roger. And so what we're trying to do is look at a market like the TSX, which is, by the way, outperforming the U.S. And not that we think that valuations are stretched in the TSX in general, but we want to look for those sectors that offer some value going forward. One of those sectors right now is transportation, logistics. And so TFI or the rails or even air transport, all of these stocks, if you look at the markets this year, are down, in some cases, huge. And we think that offers us some opportunities to get in and provide a bit of a buffer, right? Because when you have an overstretched market, Roger, you're looking for stocks that do provide that buffer if we were to enter, say, a general market correction. And we think that this sector does right now.
And what's driving that drop? Is it just people moving their money? Is everybody over in tech right now and mining?
Yeah, I mean, it's not the Baskin-Robbins flavor of the day or the year. Yeah. We're also in November going into December. This is tax loss season, so you look for the dogs in your portfolio to sell to offset capital gains. I'm not saying that that's the reason why these stocks are where they are this year, but at the end of the year, it doesn't give them a lot of support. But if you're looking for those value plays, this type of environment really does open those opportunities up. These are really well-managed companies. And coming back to our Canada story, looking at cross-border or cross-provincial trade, which we think is going to improve going to 2026, we think that also gives a lot of these companies a leg up in terms of demand for transport. Again, whether it's rail, whether it's truck, or whether it's air.
Okay, we got a little bit of everything here. Let's talk about the individual stocks. TFI, which is a logistics company.
Yeah, so TFI, we think of logistics, we think of trucking. Again, very cyclical. So if we were in the middle of a recession right now, obviously this stock would be underperforming. I think a lot of that is in this sector, Roger. So if we look at what are our views on the economy going forward, we've had a lot of trepidation by investors that Canada and the U.S. could go into recession. That's definitely not good news for trucks. I would argue right now, though, that the market has priced in a lot of the bad news for recession into a company like TFI. If we start to get those rate cuts and start to alleviate that concern, this stock should be able to do well.
Yeah, because there has been concerns about a possible recession coming in. It feels like it's been.
Well, economists are great. We're really good at predicting, 5 of the last 1 recession, Roger, and markets are exactly the same, right?
Okay, let's move on. Cargojet is our next one, and it's been struggling. It's been dropping, hasn't it?
Yeah, same type of thing. I think the stock has been really hit coming into November. Again, a lot of this could have been related to tax loss selling. We've seen the stock actually bounce in the last few weeks, and I think this is a sign that you're starting to see that value investor look at a stock like Cargojet that has a really decent market share in Canada, for example, and looking at valuations down below $68 and saying, well, this really is a good buy at this point. We've seen the stock rally up to around $79, but we think it can probably move higher.
And you see that bounce. Do you wait? Do you think there's going to be a little fluctuation still, or is it hard to tell?
I think in these names, Roger, it's not, again, we don't want to time the market per se. I think you're looking at these names as providing long-term growth for the portfolio. Whether I should have bought it at $68 or should I bought it at $79. I think that you're really looking at the fundamentals for these companies. Yeah, the stock could pull back a bit. You could wait for a pullback. It may not happen. Yeah. But we like the thesis of what this sector offers right now, and we think the current valuations are good.
Okay, and the third one, well, it's actually third and fourth, CN and CP.
Yeah, I mean, CP's done a little bit better. CNR's had its issues, but I think you're starting to see the analyst community come back kind of more in favor with CNR. I think a lot of the problems that this company had in the last 18 months is starting to fade away. Both of these companies, I think, are well positioned to take advantage of what might happen here in Canada, cross-provincial. And both, again, compared to the general market, are trading at decent discounts to the growth sectors of the market like tech that we've been talking about.
And with CN, I believe they're talking about trying to go into Mexico as well. Was that?
Yeah, and I think this ties into
CN Kansas, right?
Yeah,
yeah, and they're looking to try and expand into Mexico.
And that's a growth area. I think right now, I mean, we haven't got a new trade agreement yet with the states. We don't know what even the acronym will be for Canada, the states, and Mexico going forward. But I do think Mexico actually becomes a growth area for the rails.